With interest rates rising, it's kind of hard to figure out, should I continue to buy property or buy my first investment property, or should I wait? Or where should I buy? Instead of trying to convince you one way or the other, just like I do every single month in this episode, I'll take you through 8 investment properties that we've recently bought. Okay, I've posted them in my Facebook group in the month of February. A goal without a plan is just a dream. Hopefully these real deals will give you the education and inspiration to craft a plan around your goal so it doesn't just remain in dream status. If you're interested, carry on watching. Now this is the Facebook group where I've posted these deals in February, okay? There's 30,000 people right here. The clients who bought them have been tagged, and I'll take you through that. I post deals in this Facebook group for years, every 2 days. There's thousands of deals on there. If you can track back, you can find amazing members, amazing clients, amazing community that just helps each other. It's all verifiable. I haven't just plucked a random amazing deals. You can't do that for years and years and years, posting at the scale at which we do. So hopefully you build trust and you actually get a lot of value. Out of the 8 properties that I'll share, the last property, number 8, is my favorite. So like stick around to the last one because that will truly motivate you to get off our bum and take action. As I go through them, I'll take you through the locations, the details, why we bought them, what we like about them, tips and tricks so you can go off and buy them, and of course photos. Here is 6.3 yield cash flow premium Perth property, a 2025 regret if you don't buy. Now what I mean by that is cash flow. There's really no need to buy properties under 5% yield. I know everyone talks about how blue chip negatively geared properties grow more. We've actually debunked that. I've done a video about a month ago with all the stats and data to actually say that's not true. High yield properties, in fact, can grow as well. So there's really no need to sacrifice yield. And that's exactly what Reese has done really, really well. He's tagged here, so you can see, so you can go DM him if you really want to. And what I mean by that is, you know, if you don't buy a property now, the same property in 2025, as long as you follow data, will be worth more. So like short term, should I buy this month, wait 2 months or whatever? It's kind of like folly thinking if you ask me. What you need though is high cash flow to ride out interest rates. You should always budget for 6%, 7% average variable lending rate. And if you can hold a property on that, your yield is good enough, go ahead and buy it. If you don't, household budget means that you're gonna have to sell that property. Don't buy that property. Do your budgeting up front. We want to buy in owner-occupied areas. We want to buy in areas where the majority of houses aren't rental properties. Okay, we want to buy in areas which are tightly held by people who actually love living there and buying to live there. That's just property 101. And despite Victoria and New South Wales falling, that's exactly what we're seeing in so many pockets around Perth. And of course, this is something that I don't really talk about so much, others don't really talk about so much, but it's nice to have wide street frontage. If your property's got like a 5-meter street frontage, kind of looks crap. Even if it's this amazing property, you want wide street frontage, owner-occupier appeal to be really, really strong. Reese had no confidence before that, and he's bought interstate now without a buyer's agent. He's saved himself $15,000. So check it out. The purchase price is $470. The total funds required is $85,000 or less. Rent is $570. So that's where the yield play comes in. It's growing, 30 to 35 strong data factors, like building approvals are really low, like days on market is trending downwards, like stock on market is trending downward. I'm going to share more and more data factors hopefully as we go through the video. But we want to see this data really strong. Vacancy rate is kind of superficial data, from a growth perspective, but it's still very, very strong. Good big block, which we like to see. He's based in Brisbane, bought in Perth, didn't catch a single flight, had all the local due diligence done for him. Now, I just had a buyer's agent comment on one of my videos saying, oh, PK, but nothing can replace a buyer's agent's local on-the-ground knowledge. And I retorted or replied saying the combination of data, i.e., making sure not in flood zones or bushfire zones, etc., with the local property manager intel who lives in the area, knows the best streets, knows how to avoid housing commission areas, plus having a building and pest inspector, making sure there's no cracks, no solid structural issues. These 3 factors, data, property manager, which is free, building and pest inspector, this negates the need for a buyer's agent, even if that buyer's agent is absolutely gun. And you can do it for free, right? Because property managers are free. So there's just no arguing this fact. And we've proven this over more than 2,000 deals now, over 10 years, including my own history. Self-sufficient to rinse and repeat, building in passive income. Yes, here's the photo. Okay, when you look at photos on real estate, you can't really tell whether it's good or not. You have to look at things like the matrix. What are the numbers behind it? Let those numbers come up on screen in your mind, and you can assess, is it a good deal or is it not? But nonetheless, nice trampoline at the back. Even my son would like to live in this house, I'm sure. Let's go. 7 left. Fast disappearing high cash flow block in Queensland under 300k. Once again, similar yield, 6.6% yield to write out interest rates. What we really want is we want to buy land. Is this land that appreciates, but we need cash flow. We need that bank mortgage to be paid off. Hence, we must buy something with a structure or a building on top. But really, it's the land that we're prioritizing. And in these types of locations, fast disappearing regional Queensland, you just can't get land, like good, solid, located land under 300k anymore, right? This is what I'm talking about. Like, it's just you might look at this and be like, oh, what? Like, what's so good about this? Like, apart from the plantation and the banana trees and stuff, you just can't get big blocks like this in this location anymore. And it's this, scarce land. Doesn't matter if it's in a capital city or not. That's what goes up. And we need something on top to pay the rent. Okay, so Raphael, I actually play tennis with him, an amazing guy. Go check, DM him, ask what his experience has been. He's bought this $80,000 below suburb median. We want to buy under the suburb median. We don't want to buy, like the best property in the suburb that really weighs on future value uplift or equity uplift. We want to buy under the 50th percentile or under the suburb median. That's really, really important. And it's growing. Like, despite Sydney and Melbourne crashing or going down in value, this area is actually going up in value. This is regional Queensland. I love suburbs, or I love towns like Townsville, like Bundaberg, like Rockhampton, like Toowoomba, many others as well. Not so much Mackay and thereabouts. You have to be very selective. But these areas, 292, you can't argue with that. You didn't even need 50 grand to get in. 370 rent vacancy is fantastic. And look, this is what I'm saying. Like, if you have some data, like if you know how to interpret data, anyone can twist data any way they want, but true interpretation of data and a bit of mentoring, whether it's for me or anyone else, you can really accelerate your property journey. Like, the science of property investing is learnable. It's not like something you have to go to university for, or it's the domain of someone who's been an agent for like 20 years. Anyone can learn this, and it doesn't take long at all. Like, literally does not take long. Okay, next property, 10% below market value, 7.6% yield, South Australian moneymaker. This is a moneymaker under 250 grand. All right. Let me qualify this, right? Because a lot of people will say 10% under market value. Well, the market value, PK, is what you paid for it, because that is the market. Just hang on. Like, I appreciate your sentiments, but the real estate market is an inefficient market. The stock market is a efficient market. What does that mean? It means that everyone is fully equipped with knowledge. Everyone is trying to make money. Okay, in the real estate market, 30% are investors, 70% are highly emotional owner-occupiers. That's the split in terms of property buyers. Okay, so what that means is, like, let's say, I'll just give you one example of like hundreds of ways in which you can buy under market value. One way is that, let's say the vendor or the owner, the seller, wants like a 3-month settlement. Okay, no one else is prepared to give that 3-month settlement, but you are. Another person might have bid 400k for that property. You're only giving 350 or 360 or whatever it is, but you're happy to give them a 3-month settlement. They will make that trade-off and be like, fine, PK, we'll give you the property because we get the terms in our favor. This is one thing like that. This is just one small example, but people don't understand that this is how you can make money on the way in real estate. Okay, growing regional location, extreme rental shortage in this town. Cheryl has done incredibly well. He's actually bought twice now without a buyer's agent, so he saved 30,000. Do that again, and that's another deposit that you've just saved by not using a buyer's agent. 218 purchase price, and it's not like all of my clients are buying $200,000 properties, but if you've got a bit of borrowing capacity left, right, why not use it, especially if you know you can make money on the way in and you're going to get that capital growth. Don't just let that equity or borrowing capacity languish in the bank, or like, what's it doing? It's not making any money there. So this is what he's done. He's used that last drop of equity or borrowing capacity and really gone for it with all the right buffers. Didn't need more than 40 grand to get in. Rent is 320. What I really like is that he didn't give the keys away to his financial future to someone else. He didn't become dependent on some random property company that came up in an ad with amazing stories but with no true education based on data, and just become reliant on them for every single property purchase. That's the way to not achieve financial happiness. This is the property. Nice one. Here's the next one, 7.4% yield, okay, high cash flow, low risk property. Once again, it's not a cheap nasty, but it's a cheap and tasty, I would say. 300K, all right? Extreme high cash flow to ride out interest rates. That's what we want. We don't know how long these interest rates are going to last, but we want to buy properties that don't put pressure on our household budget. He's negotiated $4,520 after signing the contract. Yes, even after signing the contract, you can negotiate, right? Don't be hesitant to do that. If you find something in the property that costs you $1,000 to fix, why not ask the vendor, hey, it's going to cost me $1,000, $2,000, $3,000 to fix. Can you take $5,000, $6,000, $7,000 off the purchase price? You know, if you don't ask, you don't get. That's just negotiation 101. Low maintenance, big block, fantastic land to asset ratio. Once again, land appreciates, buildings depreciate. We don't want to pay predominantly for the house. We don't want this amazing house with all the, stone bench tops and amazing light fixtures and all that. I mean, renters don't need that, okay? They just need something they can stay in and be comfortable in for a while. We want to buy land because it's land that appreciates. Otherwise, you're just sinking your money into a depreciating building. All right, Tegan, fantastic work by her. I just love to see, people from both sexes, especially the fairer sex, taking a responsibility and doing amazing results. I love to see it. Purchase price $252,980. Didn't need more than $50,000 to get in. Rent is $360 after an aircon installation. You can read this. It's just a great story. She didn't pay a buyer's agent $15,000 to send her properties of real estate on Domain. You don't need someone to go on real estate and send you properties, guys. You can do that yourself if you know what to do. Here's a property, great backyard, nice for a little bit of planting and gardening as well. Nothing to complain about. 2 properties in 2 months, Queensland and WA, so good diversification from Singapore. Latest is a 7.4% cash flow yielding property. So extreme high cash flow. This is important because if you're an expat or you have your PR and you're buying from overseas, oftentimes interest rates might be a little bit higher or the LVR might not be, what you want it to be just because of the risk that the banks place on you. So you need high cash flow whether you're overseas or not. Why settle for lower cash flow when you can get this plus the same amount of growth regardless of blue chip or not? Forget that blue chip mentality. We've proven it wrong. There's a video that we've done. Extreme high cash flow, beautiful quiet cul-de-sac with boat parking, 4-bedroom, 2-bath, 2 garage. Vijay, he's done amazing work without a buyer's agent. He's bought not just interstate but internationally with complete confidence, using local property managers, using the local team, building in Pest, mortgage broker, etc. Everything hasn't caught a single flight. Don't be fooled into thinking that you have to spend $2,000 or $3,000 on a course from a buyer's agent. Really what they're doing is that's a gateway drug for you to realize, hey, I can't do this by myself because this info is so elementary. Now I need to buy their full service buyer's agent package. There's a million courses out there, all the way from 30,000 all the way down to 100. Guys, don't be fooled into buying something that won't be effective. All right, here's the property, brick, it's a really beautiful property, great appliances in the kitchen, well manicured and landscape backyard as well. Bought in Queensland from Singapore. This is a different client, Gayatri. She's one of my favorite clients because she's so hardworking, right? She's so she's applied the knowledge and got a result. That's don't do my course if you're not going to actually apply it. Okay, I'll make $6,000, but you're not going to get a good benefit out of it. Buy the course if you want, but actually put it to action. That's what Gayatri's done. She's helping other course members as well. A fantastic community. All right, so high cash flow to ride out interest rates. Renovated, new carpets, paint job, needs nothing doing. This is just like a forever hold. You just buy this until you die because it's going to become a cash cow in the future. 303, it's going to I can't predict the future, right? But let's say in 5, 10, 15 years, there's no way this is under $500,000. There's no way this is let's say in 30 years' time when we retire, there's no way this is under $1 million, 1.3, 1.4 million. It's hard to understand how it can be so expensive in the future. But that's Australian properties, as blue chip as you can get an asset class globally. Didn't need more than $50,000 to get in. Rent and $400, so really good return on investment. 1% vacancy, block size is huge. Bought this from overseas without single flight without a buy. Like, if people can do this, then there's no reason why you can't buy in Perth or Queensland or South Australia from Sydney or Melbourne. Like, just think about this. Feel free to DM her. She's a very kind, very lovely lady. No one cares about your money as much as you do. She realized this, and yeah, took responsibility in her own hands. Okay, didn't just outsource the accountability. Nice property. Second to last one, and the last one is actually like really good. I'm going to get to that. $41,000 under market value and 5.8% yield. This is like a treasure trove. This is a treasure house. You know, the comparables sold for $41,000 higher. What do I mean by comparables? Comparables means identical properties, same, you know, number of bedrooms, same part of the suburb, same like age, same block size. That's what a true comparable is. And if those properties are selling at higher, then you know that you've got a sharp deal. That means that you've got to either under market value or the suburb has grown really quick, really fast. Okay, 5.8% yield. This is what I love to see. More hit. I've actually done an interview with him, like one of these client testimonials. There's more than, I think, 90 of them in the client results playlist here on YouTube. Go check that out. Amazing guy. But yeah, this is his deal, and you can hear how he did it from the horse's mouth, so to speak. Purchase price $499, comparable value $540. So that's, you know, how it's under market value. I explained various ways in which you can get under market value. Total funds required $90,000. You know, there was 30 applications at the first viewing from tenants. You know, that's how in demand these sorts of properties. Sometimes people say, oh, look, you're buying $500,000, $400,000, $300,000 properties. Tenants don't want these. Yes, they do, right? 30 applications at the first viewing, and this one's only built in 1997, so it has great depreciation benefits, which boosts the cash flow. We don't buy just for depreciation, but it's a good bonus to improve the cash flow. Brick and tile property, you know, amazing. Look at that. I'd love to live there myself. Last one, and this is probably my favorite one, 8.2% yield, positive cash flow deal. Yep, positive cash flow, even though interest rates are like 5-6% right now in terms of lending rates. After Josh made $82,000 on a quick renovation. Let's go through this. So huge positive cash flow in Queensland growth suburb. Okay, he did a $40K renovation. It increased the value of the property. This is not just like what I think it increased the value by, but this is bank valuation, by $122,000. So that's a 3x return. That's what we want to see. If you're going to renovate something, you need that 3x return. The way to make money in life is to solve problems, whether it's your own problems or other people's problems. He solved this problem because this was a trashy house. I'm going to show you the pictures in a second, and that's how he made this big money. Okay, so purchase price was $278. This is Josh Bryan's. Total funds required was less than $50 to buy the house. Revaluation after the renovation is $400. Okay, so more than $100K equity uplift. Rent is $500 a week. Okay, remember he bought this for just $278. Of course, he did put $40K into the renovation, but $500 a week. I mean, that's just a phenomenal yield. That's positive cash flow. Like, if you can do this, like all interstate, like there's no reason to stop buying properties even with high interest rates. Okay, so those people you say can't get positive cash flow, you can. You just have to think differently. Okay. 30 to 35 strong data factors. It's not like he's sacrificed the location or anything. This is the house. Like, check it out. I should probably have gone from left to right, but this is the bathroom before. You can see it's crappy, and this is basically a hoarder's house. Like, this was the main area, or the main kitchen / living room area. Like, just so disgusting, and yeah, someone's just hoarded stuff there, and he renovated this. Believe it or not, this is just a couple of photos. He renovated every single room, and this is the new bathroom. This is the new kitchen area. So this is the power of property investing, and if you can really leverage, you know, your knowledge, you can build your knowledge and invest in the 6 inches between your 2 ears. You can then take that knowledge and literally translate it, like literally just apply it and make money. Yes, even though I have all these people that I've just shared, all these deals, they're making money in the short term. Really, real estate is a long-term game. To achieve that 6-figure passive income in 10, 15, 20 years time, whatever it is, you do need the short-term gains, because then medium-term and long-term gains compound on the short-term growth or the short-term instant equity by buying below market value that you've already achieved. That is the secret. Like, it's actually no secret, but don't just buy something hoping it goes up in the long term. You need the short-term gains. No one talks about this. I'm completely outspoken, but that's how the rule or the law of compounding works. Short-term gains plus long-term gains equals exit your 9 to 5 in the long term. Guys, I'm so grateful to have so many amazing community members, so many clients, such a great community like you guys. So thank you for being with me to level up and really take it to the next level. I'll leave links below to the Facebook group, Australian Property Mastery with PK. You know, that's where these thousands of deals actually are. That's where all my clients are tagged. You can DM them, amazing people. And also to my podcast on iTunes, Google, and Spotify, Australian Property Mastery with PK. If you level up, you know, all of that is free. Like, if you level up, you can actually get these deals. Like, it's not just reserved for someone who has some like magic bullet or some secrets. Like, anyone can do this, guys. Of course, I'm happy to help you one-on-one as well. Anyway, thank you for being with me. Hit subscribe, give it a like, give it a thumbs up, and I'll see you next time. See you later.